If you're like most people, you probably have questions about obtaining a mortgage. So stick around, we're going to answer those questions for you. Hi everyone, it's Lee Shane, your local real estate professional again. Before you begin your home search with a realtor, speak with a mortgage lender. This can be a bank, a credit union, a mortgage company, and if you need help, just ask your realtor to refer someone that they trust. It's best if you obtain a pre-approval letter before you start house hunting. This way you know how much you can borrow and how much house you can afford. Nowadays, many realtors and most sellers require you to have this letter before you make an offer. Not only does it show that you are serious about buying the house, but it shows that you've already done your due diligence, you've got your financing in line, and that they can trust that offer to be a strong offer. Okay, I'm here with Kandace Lainhart with Loan Depot, and we're going to talk about the home mortgage process. And I've been asked all different types of questions when it comes to buying a home, and I figured the best person to talk to about the mortgage process would be a mortgage professional like yourself. You've been doing this for 18 years or so.
Mm-hmm.
So why don't you start by telling us what types of home loans are available?
We have a lot of different types of home loans. We have several 100% financing options. They are all income-based except for the VA loan. The VA loan, of course, you have to be a veteran, but it's a wonderful loan, no mortgage insurance, no minimum credit score, no debt ratio limit. It's only for our veterans. Thank you for your service.
Thank you.
We also have a USDA 100% financing. It is income-based. Property has to meet the guidelines of being considered a rural property. We also have the THDA grant, which comes from the Tennessee Housing Development Agency. It is a 5% grant, 5% of the purchase price. So if you purchase a $100,000 home, it's $5,000, and it goes on up. It can be paired with the USDA loan to cover closing costs if you might need it, if you can't get your sellers to pay your closing costs as part of the contract. It can also be paired with an FHA loan to cover your down payment. It is a first-time home buyer program, but just to clarify, first-time home buyer just means the most recent 3 years. You can't have owned in the last 3 years.
So people, when they think of first-time home buyers, they think that they've never owned a home before. In this case, as long as it hasn't been 3 years, they're considered a first-time home buyer.
Correct. And there's a couple of counties that are considered hardest hit counties. You can check them out on the THDA.org website. I think Monroe County, a couple of other ones. If you are even if you've previously owned, you can still use the THDA grant because it's a hardest hit area. So those are our 100% programs. We also have 3% down payment programs on the conventional side. We have a Home Ready program, a Home Possible program. Both of those you have to meet income limits. And then we have just a regular 3% down program where you have to be a first-time home buyer.
So what is the difference between the 3.5% FHA and the 3% conventional? Why would somebody want to choose one over the other?
So it really depends on the borrower. We would most likely compare the two for every borrower. If they have stronger credit scores, they may lean more towards a conventional program. If you have a few credit issues, you may lean more towards the FHA program. The difference is conventional is a little bit tougher, but the mortgage insurance on it is not lifelong. Once you get to 20% equity in the property, you can drop the mortgage insurance.
So mortgage insurance is, when you drop that, your payment drops also.
Correct. With FHA, it's lifelong unless you put at least 10% down right out the gate when you purchase the home.
So you can save thousands of dollars over the life of the loan by doing, once you lose your mortgage insurance.
Correct.
20%. Gotcha.
So those are just some of the programs. Of course, you can always put more than 3% down. A lot of people put 5% down, and if you want to avoid mortgage insurance altogether, you'd put 20% down on a conventional.
Avoid the mortgage insurance. Okay. So when someone comes in to apply for a loan, You look at all different types of things, and it's more than just credit. And there's lots of factors. So what are some of the factors that you look at when you qualify them for a loan?
Okay, there would be, of course, your credit, and then we have job stability. We've got to be able to prove your income. I have people all the time that call me and say, I get paid, but I don't get paychecks. So you've got to have stable income that we can prove for the last 2 years. We will look at 2-year job history.
Okay.
If there are gaps, sometimes they're explainable. Sometimes a new mom has taken some time off to be a stay-at-home mom. We have programs for returning to the workforce years later. And of course, dads can stay at home too. So we have that. Lots of different factors there. Previous payments on your rental, those come into play sometimes.
Okay.
So there's certain programs where we have to prove that you've paid your rent on time for the last 12 months. So your credit report may look good, but if we have to verify your rent and you haven't paid your rent on time, and by on time, over 30 days late is when you start getting in trouble. We don't care if you're a few days late. Those are some of the factors that we really look at to determine if somebody can handle a house payment.
What about, is it required that somebody has a pile of money in the bank?
Not at all. Mm-mm. In fact, if you do have a pile of money, though, make sure it is in the bank and not under your mattress, because we will verify where your funds for closing come from. And you can't just take it from your safe and go deposit in the bank when we can't prove it. We have to show where they came from. We have to paper trail it.
That has to do with was it the Patriot Act or?
And the laundering. You can't launder your money. We got to make sure you're not laundering your money.
So if a buyer doesn't qualify right now for a mortgage, what steps can they take, and what can you do to help them?
Well, I can look at their situation and kind of determine where they need to be and how they need to get there. It could be various things. If, for example, I had somebody recently that had a lot of student loans, close to $100,000 in student loans on a conventional program. If there's a set payment in there for those student loans, I only have to count that payment. So if it's $50 a month, that's all I have to count. On an FHA loan, I have to count 1%. So you're looking at $1,000 a month payment. Yeah. And that kind of hurts people. So then we really have to lean towards the conventional side in that scenario and figure out what they need to do to get approved on a conventional side. If it's just credit scores and we need to work on that, a lot of times I can look at your credit and tell you what you need to do to get your credit scores up. If it's income, I can look at where you are and tell you what you need to do. Your boss needs to start writing you a paycheck and taking out taxes.
Ask for a raise.
Yeah, or ask for a raise, yeah.
So if there are credit issues, it's not the end of the world. I mean, you've seen enough of these that you can determine what the course of action is to get them to where they need to be. And I suppose in worst case scenarios, there's a program that you can put them into to get them where they need to be to qualify for a loan.
Correct, yeah. We work with a company that can really help you, especially some of those medical collections that have already been paid, but they're still on your credit. They can really help you dispute and get those corrected on your credit report so your scores will improve. A lot of times, probably at least 50% of the time, somebody can get their credit up just by paying down a credit card. The credit companies really look at how you're using your credit cards, and if across all of your credit cards you have $1,000 available credit and you've used more than 300 or so, you start looking like maybe you're living paycheck to paycheck and having to depend on those credit cards, and that's all the credit company can see. They don't see your savings account. They don't know. So you become a risk. You look like you might be a little bit risky to lend money to because you might be relying on those lines of credit. So a lot of times it's just paying off those credit cards or paying them down.
So it sounds like a third or below is where you need to maintain your credit cards.
Yes.
Don't
Definitely.
max them out.
Never. Do not max them out. Don't close them either. And a lot of people say, I'm just going to pay this one off and close it. Don't ever close it, because then you've ended your longest line of credit, and that's part of your equation. That's part of how they determine your credit score.
So, again, that goes back to no credit versus bad credit. I mean, at least if you have bad credit, you have credit.
Exactly.
Because there's so many people that we know that pay cash for everything, and when they go to buy a house or something, they have no credit.
And in those situations, we can build alternate credit. We can get power bills, auto insurance. We have to have 3 items paid as agreed for 12 months, verification of rent. So even if they don't have any credit, if they're a no score, that's okay too. We can build the credit from there. And even if they qualify income-wise, we can even use our FHA THDA program. So,
well, great. So it sounds complicated, this whole process. Typically, how long will it take from the time someone comes in and says, Kandace, I want to buy a house. Can you help me? How long does your pre-approval process take?
Well, it depends. If they come in with pay stubs and tax returns, I can get them pre-approved in a matter of minutes.
2 years tax returns.
2 years tax returns.
And a month?
Not necessarily. If you're self-employed, definitely 2 months tax returns. If you are an hourly employee that's been on the same job for the last 2 years, I just need your W-2 from 2018 and your pay stub, and I can get you pre-qualified right there.
So we're talking
minutes.
Wow.
And if you go online and fill out my application, then it automatically alerts me that you've filled it out. It tells you your credit score right online, and I literally push a few buttons and can run it, and it's a pre-qualification in seconds.
I'll link that email or the website link to at the bottom of this video, so you can click on that and go straight to Kandace's website there. So now that we've got the pre-approval, what happens once the buyer comes in and says, Kandace, I found a home and my realtor got me under contract? What happens from there?
Okay, I get a copy of the contract.
Okay.
I plug everything into the system. It's going to figure out what rate we're looking at. I pull up your taxes, so that way I can give you a pretty accurate payment. I'm still kind of guessing on your homeowner's insurance, which, by the way, your homeowner's insurance and your taxes are going to be part of your payment. So in the very beginning, I'm kind of guessing a little bit because I don't know what your homeowner's insurance is going to be, but I'll plug everything into the system, get disclosures out for electronic signature. Hopefully at this point, I've already got your pay stub and your W-2 and a copy of your driver's license. As soon as you sign those disclosures that I send to you, the file goes into underwriting, and within 24 to 48 hours, we have our preliminary underwriting approval. So then you have an official approval. You're not pre-qualified anymore. Right. You're pre-approved.
Okay. So that's good news, not only for the buyer, but and the seller and the realtor as well. That means that the deal is probably going to go through to closing.
Correct.
So during that process, I know a lot of things can happen. Not only from the realtor's perspective as far as the home inspections and appraisals and all that sort of stuff, but what is your advice for a potential buyer during this process between the preliminary approval and the closing?
Okay, number one, don't let anybody pull your credit. That's a big no-no. I've had people come in a day or two before closing and say they just went and bought all new appliances on credit. Can't do that because you're going to be approved on the credit that I pulled originally. So if you let anybody pull your credit or open any new accounts, it's got to go all the way back through underwriting again if you even qualify. If that throws you out of your debt to income ratio, you may not qualify anymore.
So that there could be the end of the deal. I mean, if they go out, like you said, and say they think they're going to buy a new house, they want new appliances or new furniture, and they go to an appliance store and they apply for credit, then that could knock them out altogether. They'll no longer get the house, most likely, but they will have new appliances.
They will, but nowhere to put them.
Nowhere to put them. Okay, well, that's really, really important for everybody to understand that once you're trying to buy a house, focus on the house. Don't go out and apply for credit. Don't go buy a new car. Continue to make your payments on time. Keep doing the things you need to do. And most of all, listen to your loan officer all the way through the process, because she'll be working with your realtor to make sure that you get the house and everything goes well and it closes on time and everybody's happy.
And we're literally talking 30 to 45 days.
Yeah.
So just put off the new car.
Just hang in there.
The furniture until we close.
Right. Do you have any final suggestions or comments when it comes to the mortgage process?
Well, one of the suggestions that I definitely have is people are sometimes surprised when they have a payment in mind. They think, I think I could handle a payment of about $1,000. And then they tell me I want to be pre-approved for $300,000 because I think that $300,000 is $1,000 payment. And until you've had a payment or a mortgage before, sometimes that's what you think the payment's going to buy is a lot different, because remember, we're adding taxes and insurance in there.
Right.
So if you buy a $100,000 property in the city and you have $2,400 a year in city and county taxes, there alone is $200 a month of your payment.
Wow.
So sometimes what you think a payment might be, you definitely need to come in and first of all, make sure what you qualify for. A lot of times I have people think I'm probably only going to qualify for about a $500 payment, and they come in and I'm like, you can really go shopping for pretty much whatever you want, but this is what your payment would be at each loan amount.
Now that works the other way too. People will go out and they'll get a realtor and they'll look at houses at $300,000, $400,000, $500,000. They come to see you and you say, I'm sorry, but you qualify for $200,000. So, again, that's the reason that we need to send everybody to a loan professional to get pre-qualified and know how much they can buy before they go out and look at houses.
You definitely don't want to find your dream home and find out you can't get anywhere close to it.
Yeah. Now, the other thing is people think that I'm paying $1,500 a month for rent. It means I can have a $1,500 a month house payment. But again, it goes back to what you can qualify them for.
Correct.
It may be more, maybe less. So there's a lot to what you do.
A lot.
And I'm glad it's
a
you and not me.
And it's a puzzle, and we figure it out and compare scenarios and figure out what's best for each. Every single borrower is a little bit different, and we work with you to figure out the best way to get you in the house and what's going to work best for you long term, because it's a big commitment.
It is. Probably the biggest purchase you're going to make. And that's where we work together. As a realtor, I'll help you find that house and make sure it's a good fit for you. As a loan officer, Kandace will make sure that the important part, the money part, is done and gets us to the closing table. If you have any questions, again, there's a number there for Kandace, and I will link the information again below in the comments. If you would, hit the subscribe button that's probably right about there. And if you have questions, again, leave them down below. Hit the bell. That way you get notified next time there's a video put out. And until then, we'll see you later. Thank you, Kandace. I hope you found this video informative. If you have any questions, you can always leave them in the comments section below there, or you can contact me directly. And as always, don't forget to click on the subscribe button, ring the bell, and check back next week to see what I have in store for you.